Hello and welcome to this workshop covering the fundamentals of cryptocurrency. We are glad to be hosting Josh and Nico from Digital Surge, a leading Australian cryptocurrency exchange. At the start of the event, Nico will walk us through the basics of crypto and blockchain. Josh will then cover what to pay attention to when investing in cryptocurrency, followed by an investing demo on the Digital Surge platform. We'll then conclude the event with a Q&A session. I would now like to pass it over to Nico to get this started.
In the world of crypto, no banks or PayPal type services are needed. Money passes directly from me to you along a blockchain network. Blockchain is the innovative technology that allows us to trust and safely exchange things of value with complete strangers because trust is built into the network itself. We'll get into this a bit more in a moment. First, let's look at some of the advantages crypto has over regular money. So crypto provides us with a more efficient way to send money across borders with significantly lower fees and transaction times. It's a completely new way to exchange value and do business directly with one another without the need for third parties like banks or real estate agents. Crypto can also provide improved access to financial services like savings accounts, loans, insurance, and international money transfers. This is particularly impactful for the billions of people in the world without bank accounts, who now only need an internet connection to access many of the banking and financial services we take for granted. And finally, cryptocurrency, for the first time, gives us true ownership and privacy of our assets beyond the control of financial institutions. This is the first time you're hearing about what crypto actually brings to the table. You might be wondering how all these things are even possible. Well, the answer lies in the very clever technology that crypto is built on, the blockchain. Things tend to get technical pretty quickly when talking about the blockchain. So in the interest of our 1 hour session today, I'll just give you a brief overview of what this technology actually allows us to do. So currently in society, whenever a serious exchange of value needs to occur, whether it's buying a house, sending money to someone overseas, or purchasing car insurance, we generally bring in a third party like a bank, insurance company, or real estate agent to oversee the process and make sure everything goes as planned. When dealing with large sums of money, it's hard to fully trust someone you don't know, and there are a lot of things that can go wrong in the exchange. So instead, we bring in these third parties to act as a kind of trusted middleman, ensuring that both the buyer and seller get what they want. For this service, these third parties charge us a fee that most of us are probably used to, simply because there was no alternative until now. What blockchain does is allow us to do business safely and directly with complete strangers because trust is built into the architecture of the system itself. Not only do you not need to involve a third party like a bank or a real estate agent, you don't even need to know or trust the person you're doing business with because you both trust the system itself. No single entity owns or controls the network, and there are thousands of people around the world who contribute to maintaining its legitimacy and security. While the technology behind blockchain is completely unprecedented and truly fascinating, we won't be getting too deep into it today, but if you're interested, we'll be running other workshops in the future, and there are plenty of more detailed explanations online. Before we move on, it's important to note that while Bitcoin and crypto were blockchain's original application, the blockchain space is rapidly evolving, and this technology can now be used to store and transfer not just money, but virtually anything of value that can be digitized. Some of its applications beyond finance go into things like digital identity, real estate, online voting, supply chain management, music and video streaming, and much, much more. Regardless of what happens with this year's crypto mania, there's a very good chance you'll be seeing more and more of blockchain in the future. Now, there's a common point of confusion in crypto that I'd like to address, and it's around why there are so many cryptocurrencies and how they differ from Bitcoin. While Bitcoin is still very much number one in the crypto space, learning about how crypto goes beyond just digital money is what got me really interested in this technology. Something crucial to understand about cryptocurrencies is that they serve purposes beyond just a payment method or a store of value. Each cryptocurrency created since Bitcoin has its own unique function and has been specifically designed to either improve on an existing technology or solve a real problem in the market. Let's take Ethereum, for example. Ethereum, which most of you have probably heard of, is not just a form of digital currency, but also a platform which facilitates the creation of smart contracts and decentralized applications. It's essentially a decentralized version of the internet where people can do just about anything you can think of without involving the usual middleman companies and third parties. So for example, One of Ethereum's many applications that has gained a lot of traction is a project called Golem, which is a decentralized marketplace for buying and selling computing power. Basically, Golem allows people to temporarily rent out their excess computing power to those who need it. This can be extremely useful in industries like 3D design, photo and video editing, online gaming, AI, or pretty much anything that requires a lot of computing power. For example, I've got a friend who studies architecture and internal design. He does lots of 3D modeling and visualization on his laptop. And while most of his work throughout the year doesn't require a huge amount of computing power, he often needs to make quick amendments to his assignments after receiving preliminary feedback from his professors. While he may have submitted an assignment on time, these amendments usually involve a lot of rendering and computing power, and he's often faced with the problem of having to wait days to resubmit something that is essentially finished, sheerly because of how long his laptop takes to render the final copy of his work. Golem's service would be perfect for him and anyone else in a similar position, as they could rent out their unused computing power throughout the year, accumulating Ethereum's digital currency, Ether, which could then be used to rent out extra computing power during periods of time when they actually need it. And this is just one niche example from a single industry. Cryptocurrency's idea of decentralized and open marketplaces is truly game-changing, and it allows regular people to pool and share their resources together for a far more efficient way of doing things. Other cryptocurrencies like Filecoin, Data Network, and Energy Web Token are looking to create similar kinds of open marketplaces for things like computer cloud storage, bandwidth for video streaming, and even for the excess electricity you get from power stations or your solar panels. And this is really just the tip of the iceberg of what Ethereum and other crypto projects can offer. And it should give you an idea of why the crypto space is expanding like it is. The last few years have shown that there's an incredible demand for this kind of innovative technology, resulting in the value of Ethereum's digital currency doing about a 15x from this time last year. And really, when you consider what Ethereum is, how many other crypto projects are built on top of it, and the rising demand for this sort of technology, Ethereum as a project and an investment may very well still be in its early stages. And while I could happily go on about some of the other fascinating use cases of crypto projects, we want to leave some time to get into the investing side of things. If you're new to crypto, I know this can be a lot of information to take in, but I appreciate your time and attention, and I hope you have a better understanding of what cryptocurrency is and why it has so much potential to transform society. I'll now pass you over to my colleague Josh, who's going to take you through some of the more practical aspects of investing and getting involved in crypto.
Thanks, Nico. So now that you guys have an understanding of the fundamentals of cryptocurrency, let's talk a bit about actually getting involved in crypto. For a long time, investing in crypto has been complicated and not simple. But nowadays, there are plenty of platforms out there that make the process easy. But before diving in, there's a few things you should know first. Volatility. It's something most of you probably have heard about before or experienced. Personally, I see volatility as an opportunity, and it's one of the things that attracts me to crypto. Sudden price movements can yield either big gains or big losses. And it's something that you often need to be aware of, and something you probably haven't experienced in other markets before. When you see the value of your portfolio suddenly dropping, it can be gut-wrenching and really test your nerves. I often see first-time traders get caught up in panic and losing a lot of money. The best thing to do is always have a plan before trading and stick to it and not make any decisions in the heat of the moment. FOMO. FOMO is another emotion that causes even the most experienced traders to make irrational decisions. It is the fear of missing out. I believe it has caused a lot of the crypto craze over the last few years and can often cause a lot of investors to lose a lot of money. In crypto, FOMO is the fear of losing out on a limited time opportunity and all of the potential profits that could come with it. It usually results in someone rushing out into an investment they don't fully understand, and it's something we recommend you don't do. Opportunities present themselves all the time in crypto, and it's much better to take a long-term strategy and take your time to understand the investment that you're making before you put your hard-earned cash in it. Especially just because a friend of your friend said that this is a good investment, or Elon Musk tweeted about it. You know, you should do your due diligence and make sure you understand what you're getting into. Investing is a marathon, not a race. While getting rid of the FOMO effect is difficult or sometimes impossible, you can do your best to combat it by developing a defined trading plan and having a set of goals for when you should buy and sell for each investment you make. This could include limits of allowable losses and certain trigger points when you should sell your coins, knowing when to take profit off the table. This can save you the stress of having to decide in the heat of the moment and making poor decisions. This next one is something we hope you don't have to learn the hard way. Unfortunately, the crypto space has no shortage of Nigerian princes or scammers offering you free Bitcoin. So it must be said, if it's too good to be true, then it probably is. Not all advice is created equal, and a common mistake beginners make is listening and reading advice of social media and other people that they don't really know or have never really heard of. If you're going to take someone's advice, make sure that they have some expertise and a decent following or reputation before to back it up. And even still, it's best to do your own due diligence because they may be shilling the coins that they have, that they're currently holding. Portfolio diversification. Diversification is a concept you're probably familiar with, but today we're just going to briefly cover over what it means in the world of crypto. Cryptocurrencies are generally classified into three categories. You've got your low cap, your mid cap, and your high cap, with the low cap being the lowest risk and the large cap being the safest. The cap refers to the market cap of the crypto, which is a good indicator of how safe cryptocurrency is. Generally, the bigger the market cap, the safer the crypto, but the less the chance of those 100x returns. Like with regular investing, diversification spreads out your risk across a wide range of assets. Generally in crypto, most investors allocate the majority of their portfolio to the top 2 to 5 cryptocurrencies, with the most being in Bitcoin and Ethereum. The remainder of their funds are then allocated into some other promising projects with high risk-reward profiles. Needless to say, a well-diversified portfolio will look different for everyone depending on your personal investment goals and appetite for risk. Still, the approach we most commonly see is the buy and hold strategy, where people allocate most of their funds to a handful of top cryptocurrencies with the intention of holding them for a number of years before selling and locking in profits. Here's an example of what a balanced portfolio could look like based on the previous guidance that I gave. So in this example, you can see we've got 70% of the portfolio allocated into high cap coins such as Bitcoin and Ethereum, with another 20% in mid cap coins like Cardano, Link, or Binance Coin, and then the following 10% in some sort of lower cap coins that have the potential to have high returns, but obviously much riskier, such as Cake, GRT, and Avalanche. So that's just a bit of a brief overview of some of the things you should be mindful about before you actually dive in and do some investing. I'm going to move on to providing a bit of a demo now of the digital search platform. So I've just logged in already. So this is the digital search website. You can create an account. It's free to do, and it takes a couple of minutes. This is logged in with one of our demo accounts. So when you first log in, you're presented with your portfolio and your dashboard. So I'm currently on the dashboard now. You can see here that this is the total overall value of the account. So $1,665.29. And you can see here a graph of how the portfolio has been performing over time. So you can see for the last 1 month, it's had a bit of a battering. It's gone down 13% or $256. But we can change these time frames to see how it's performed on lower time frames. Let's maybe drop it back to the year. So you can see a year ago when this account was created, we just had some test money in. Even though it's had a bit of a battering lately, it's still gone up 1,000%, which is pretty good. This was just some test money that we're using to play around with the site. On the right-hand side here, you can see a breakdown of the portfolio allocation. So it gives you a bit of a pie chart of what the portfolio looks like. And if we click on it, you can see the detailed breakdown of the holdings. So you can see how much Bitcoin we've got, the dollar value, the crypto amount, and so on with all the other assets. Now, like I said, this is just a test account, so it's not really following the diversification strategy that I suggested in the presentation. So moving down, You can see here the top gainers. This is what's happening in the market. So these are the list of the top coins, the coins that have gone up the most in the last 24 hours. So you can see here, Anchor has gone up 24% in the last 24 hours. You can see its current price. You can see the other coins that have moved up the most. And there's this little link here called See More Gainers. And that will take you to a list of all of the coins based on the percentage gain in the last 24 hours. You can click on this to go into the coin and view more information, or have a look at analyzing it if it's something you're interested in buying. Just below that, this is your personalized, customizable watch list. So you can remove coins from the watch list. You can drag it around and set it up in the order that you want. And this is what you see every time you log in. So you can see the name of the coin, current price, how it's gone up or down in the last 24 hours, as well as just, a little trend line that shows you how it's performed over the last 24 hours. Moving down, you get a little news aggregator. So this here shows you just some of the top stories that's happening in crypto now. Just with a heading, you can click on it to go into the news article and learn more. So that's the overview of the dashboard, which is what you see when you first log in. So moving on to the wallets page, this is your personal wallets. So you can see here the value of the crypto that's in the wallet. So this is the total value of all of the coins that this account has. You can see here, this is my Bitcoin wallet. You can see how much is in there, the approximate Australian dollar value. You've got some actions here. You can send or receive. You can buy and sell. There's a search box up here if you want to search for the coin. You can, by default, it only shows you coins that you actually have money in. So if we untick this tick box, we can kind of go down and see coin wallets that are empty. So you might, for instance, want to receive some coin from an external wallet. You can press the receive button and it'll pop up with the address to receive that coin. So this is the overview of the wallet page. You can go into the individual coin to find more information. So if I click on Bitcoin, for instance, this will take me into my Bitcoin wallet. You'll see my current balance. You'll see here the same actions to send and receive. Below it, you'll see all of the transactions that are specific to my Bitcoin wallet. And right here, this is the buy and sell price model. So this is just a quick and easy way where you can buy and sell, the particular asset that you're interested in. I'll go over that shortly. Moving forward, if you go to the buy and sell menu up the top here, this will take you basically to the page which has all of the cryptocurrencies that we currently have available that you can purchase. So there's some filters up the top here. We can click on the top gainers, and this will filter the list based on the percentage change based on the time filter selected. So you can see, shows you those same coins that you see on the dashboard. And we can change this to say what coins have gone up the most in a month. We can change this to the top losers, which coins have gone down the most. Go back to all assets. We can search for a particular coin if we want. We can search for Dogecoin. And as you're going down the list, you might want to analyze the coin some more. So you can just click this little button. It'll pop up into a new window. And you can also add the coins to your watch list that you're interested in. So if we click on, say, Bitcoin, we're now taken into the the detailed page of that particular asset. So we're now on the detailed page of Bitcoin. You can see the price. You can see how much it's gone up or down in the current time selected. So you can see on the 1 month, it's gone down 13%. If I say select to 1 year, you can still see it's gone up 214%, even though we've had a bit of a battery in the last month. And you can change these timeframes to look at different timeframes of the asset. And moving down, you can see more information about the coin. So you can see the market cap, which is what we're talking about before. The volume, the trade volume globally of how much Bitcoin's being traded, some other information about the asset. Now this page is in a similar layout for all coins. So you can go into any coin, view the graph, view all the information about the coin. You can view, there's a bit of writing here about it, as well as a link to the official website. And there's some news, and all the news is specific to the current coin that you're in. You can also click on this to go into the trading view charts. So we can go into, say, 24-hour chart of Bitcoin to see the candles if you want to, see the candles and get into more granularity of what's happening with the price. And on the right-hand side, this is, say we're now in Bitcoin and we're interested in placing a trade. We've got two options. We've got an instant order or we've got a trigger order. So with the instant orders, this allows us just to basically type in an amount and purchase it. So if I just type in $10, you'll see here, it tells me how much Bitcoin I'm going to get. And you can see how much money I've got to spend, which is $115. So if I click buy, you can see that's simple. It's literally one click to buy crypto. And if I want to sell, I can also type in the amount I want to sell, and it'll tell me how much I'm going to get. So let's just sell that, and I can get back into my wallet for my Bitcoin by clicking on this link. And you can see here that I just bought some Bitcoin. Oh, that was from before. Let me just refresh the page. You can go, you can see that was the buy that I just made, and that was the sell that I just made. You can click on it to get more information. We go back into the Bitcoin page. The other thing we can do is do a trigger order. So a trigger order is similar to a stop loss or a take profit. So you set the trigger price of when you want the trade to occur. So if we're on buy, we could go, okay, we want to actually buy Bitcoin when the price goes down to 40,000. So I could just say 40,000 or buy one Bitcoin. Press review, and it'll just basically give me a confirmation. It'll say if the Bitcoin price falls to 40,000, I'd like to buy one BTC. Gives me a breakdown summary. I can click confirm, and that's it. My trigger order is now set. So if Bitcoin does fall down to 40,000, it's going to attempt to purchase that one BTC. And similar for the sell, we can set a stop loss. So you could go, I've just bought one Bitcoin. I'm worried that if the price falls down too much, I could sell it 42,000, similar thing. So if the price of Bitcoin falls to 42,000, I'd like to sell one Bitcoin. And you can obviously press cancel and go back and modify it. So that's how simple it is to buy and sell cryptocurrency on digital search. They're the main features of the platform, but I will go through a few other things. So up the top here is your account funds. So this is how much money you've got in your digital search wallet. You can preload your account, which is something we do recommend that you do, so that if you have money in your account and you want to buy and sell, you can do it straight away without any delays from the bank at all. It's free to deposit if you're depositing by PayID. It's free to withdraw. If you want to deposit money into your account, you just click this little button, deposit funds. We've got two payment methods, PayID or Poly. The recommended option is PayID. Most banks do support it. So if your bank's not listed here, you can just click other and you'll just get some generic instructions. So all I would do now is log into my internet banking. I would copy and paste this PayID email address, make a payment to that, and generally within a few seconds, you'll see the money appear here in the account funds, and then you can use those account funds to buy and sell crypto. Here on this little bell is where any alerts will be shown. So if you do set a trigger and the trigger is fired, you'll see the trigger appear here, as well as if you set any price alerts. Moving on to onto this drop down, you can see a few other navigational items. So going to the account settings. So this is an overview of your account profile. One of the things I would recommend that you do is enable Google Authenticator. So that is two-factor authentication. So by default, we enable SMS authentication. So for any crypto withdrawals or sending money out, you'll send an SMS. This, if enabled, just adds an extra layer of security. It is required for logging in, and it's just a more secure method. Just below on the profile page, we have the affiliate dashboard. So we have one of the best affiliate programs out there. So if you refer a friend, you just give them this link, they sign up using that link. Any trading fees that we collect from that person, we'll share 50% back to you. So we've got some of our customers earning a few $1,000s each month, passive income, just because they've recommended a bunch of their friends that do quite a bit of trading. You can refer your self-managed super fund and get some trading fees back from that account, or if you've got any friends, you can give them that link and get some passive income. A few of the other things that you can do, you can set up a price alert. So, if you just want to kind of keep an eye on the market, but you don't want to commit to placing any trades or any trigger orders, you can set up some price alerts. They're free to do. You can set up as many as you like. It's really simple. You just click this button. You go, okay, I want to know when Ethereum gets to $1,500, and I want to get an SMS and an email. Press create alert. That's it. So when Ethereum drops down to 1,500, I'm going to get an SMS and an email. And I can jump on my computer or jump on my phone, check it out, make a decision on what I want to do, or just do nothing. But just so this lets you know what's happening when that price hits that trigger. Similarly, you can see the trigger orders page. So where I was before in the buy and sell screen, once you set a trigger order, you can come in and see all the triggers that have been set up. So you can see there's a couple that have already been set up in the account. You can turn them on or off. You can go into them, edit them. You can delete them. You can create another trigger order from this page as well. So it's just a matter of clicking on that link and just going, okay, what coin am I interested in? When BNB hits $100, I want to buy one BNB. Create trigger order, give me the confirmation, and you'll see that it's now there. So it's that simple. The other cool feature that we have, that if you just want to get some exposure into crypto, but you don't really know what to do, you don't want to trade, you just want something more passive, then recurring buy might be a good option for you. So recurring buy allows you to set up a scheduled periodic purchase of whatever cryptocurrencies you want over what period of time you want. So for instance, they get paid each week or each fortnight, and you just want to put in $20 into Bitcoin or $20 into Ethereum, you can do that. First thing you do is log into internet banking, set up your recurring payment to fund your account. So you make sure you got money up in your account before the recurring buy is set to go off. And you just click here to set up a recurring buy. So I just want to buy some Cardano. I want to buy $20 starting from, say, tomorrow at 10 a.m. And I'll want to do that every week. I'll click add new recurring buy, and you can see it's there. So tomorrow at 10 o'clock, it's automatically going to go and buy me $20 worth of Cardano. So it's a good way to get exposure to crypto. It's called dollar cost averaging. It's a way that, you get the ups and downs of the crypto, but overall you get the long-term trend. We believe crypto is a new asset class and it's here to stay. So it's still early days. So it has shown in the past, if you were to invest small amounts of money into Bitcoin over a couple of years, you would see a very strong return. So those are the main features of the Digital Surge platform. The other big thing that we have here is our live chat. So if you click on here, you'll be prompted with live chat. You can go send a message. Go, hi guys, I need help. If I can type. And generally you'll get someone to reply back in a couple of minutes. So we have local Australian support. We maintain this. It looks like Dan's responding. We have someone manning this from 8 a.m. in the morning to 10 p.m. Monday to Friday, and I think 10 a.m. to 8 p.m. on the weekends. So I guess our core value propositions are just around simplicity, ease of use. So we spend a lot of time making the platform as easy as it possibly can be. And then if you do need some help, we do have our live support. You can see here Dan's gone back to me. So it's just, gives you a bit of extra reassurance if you're not sure where to go. A few other things that we're working on is we're building what we call in Crypto Simple. It's our new education hub that Nico has been working on for the last 6 to 9 months. So we'll have heaps of educational content that you can read. And I believe he's got some PDF documents that we're going to share back through to Nathan if you guys want some more details on any particular topic. So that's a demo. Thanks guys for listening, and appreciate the opportunity to be able to present. I'll pass it back to Nathan now. I believe he's got some questions for us, or open up to you guys for questions.
Okay, excellent, Josh. Thanks for that really in-depth platform. And so guys, the digital search platform is one of the best I've seen so far. Really simplistic, it's the bare minimum of what you need and then some. So I really recommend that you guys go on to actually use this platform. Thanks for that demo, Josh. And also thanks for walking us through the investing part of things. So right now we're just going to open up the floor to just general questions you guys might have, because as I've said, you might have doubts and all of that. So I'm just going to give you guys a bit of time to just try to organize your questions, but I'm just going to start things off with a question that we have had from people who were registering for this event. Now, some people had questions around the amount of funds you actually need to get started in cryptocurrency investing. Yeah, so maybe Josh, you could maybe provide a few pointers on how much you actually need to start. Do you need, let me say, plus $100, or can you start with as low as $1? And also, what's the minimum investment you can make using the digital search platform? So what's the minimum number of dollars you have to spend in order to make a trade?
Yeah, sure. So the minimum that we have currently is $10. That's per trade. We are looking at ways to be able to reduce that. But $10, you can kind of get your feet wet. There's no deposit fees, so you can deposit $10, just test it out with the $10. There's no real minimum amount of capital that you need. I mean, as an example, my wife, she bought, I think, $20 worth of Doge back before it kind of went crazy, and then sold it for $850. So you can make actual decent returns on small amounts, but it's kind of like a percentage wise. Like if you're going to make 10% on $10, you're only going to make $1. But if you put in $100,000, you'd make 10,000. It's all about the percentage gain at the end of the day.
Excellent, thanks for that. And just a follow-on question in that regard. So what are the transaction fees like on the digital search platform? Yeah,
sure. So we've attempted to make it as simple as possible. We have a fixed fee, it's 0.5%. So on a $10 trade, I believe that's 50 cents is what you'd be charged, or 5 cents, sorry, if my math is correct.
Yeah, excellent. Okay, thanks for that, Josh. So we're going to now open up the floor to questions. So if you're okay with turning on your microphone to ask a question, that's okay. If you want to pop a message into the chat to ask a question, that's also okay. So I'm just going to give the floor maybe 10 to 15 seconds to ask any questions that they might have.
Oh, hold on. Yeah. All right, so we got one from Jack. What is your thoughts on technical analysis, and how reliable do you think these strategies many crypto enthusiasts use? Well, I'd say technical analysis, it can be a double-edged sword. So it can lead to bias. You can chart it and use the chart to kind of just, make it, you can kind of make the chart show whatever you want the chart to show. That's the problem. So you need to have a process that you follow that's consistent, reliable, so that each time when you're doing it, you're not, being biased to your own charting analysis. And I mean, you can see certain trends and things that are happening, and it's not a sure bet that if you do this chart, this is going to be the outcome, because it's a dynamic market. You've got buyers and sellers. No one can predict if the price is going up or down. But if you can look for certain patterns and have proper risk management, so that you're only trading a certain amount of capital, and that say every 3 out of 4 trades you make money, then overall you'll make money. And there are successful traders that do technical analysis and do make a living from it. So it is definitely possible, but you can get caught up in seeing other people's charts, and the charts are just kind of made in a way to try and highlight their narrative that they want to push, which may not necessarily be the same as if you did your own analysis.
Yeah, just to add on to that as well, I think if you combine it with the fundamental analysis side, and kind of having an understanding of the market and the actual asset you're dealing with. You know, these two strategies, they really go hand in hand. If you know something about what the use case is, what the current climate, you know, and how people are feeling about the coin, combining that with the statistics and the technical indicators is definitely going to be your best bet for reliability. So I wouldn't say just, you know, if you're focusing on strictly one strategy, you might get knocked around a bit, because yeah, there's a lot of external factors that influence the price of cryptocurrency.
So the next one from Petra, I'd like to hear your opinion on what do you think about the critique that crypto is a Ponzi scheme, and what about the critique that there are no stable coins and they literally almost follow Bitcoin? Okay, so I mean, I'll let Nico answer the first part around the Ponzi scheme, and I'll go to the second part on stable coins.
Yeah, sure. Well, I'm, you know, newer to crypto than the founders of Digital Surge, and I did, you know, I had a lot of doubts when I've heard about it for many years, and I was kind of like, what is that thing that people keep talking about? Why do they keep talking about it? I don't think it's a Ponzi scheme for many reasons. I mean, you think about the technology that's already being integrated into society. There are so many big companies, and you know, these are companies that don't mess around. They're putting in billions of dollars. These are banks. These are, you know, tech billionaires, tech giants who are investing in this technology. And I think the plain fact is blockchain technology, what these cryptocurrencies offer, they're just not offered currently in the world. There's so many different utilities I can think that cryptocurrency will bring, and you know, it has been and it will be a gradual process. Like, people don't come around to these ideas very quickly, but it does seem to me like we're at the start of something big. I mean, there's so many. If you even think of the fact that billions of people in the world don't have bank accounts, you know, when they get paid, they put their money wherever they put their money, under their mattress or something like that. And cryptocurrency is kind of the first way that all these people in the world can have a way to securely store and send money without needing a bank, which is, yeah, definitely, that's just, you know, one use case to show that this really does have some substance behind it. And so many people that I, you know, respect, public heavyweight intellectuals, are really deep in the field because it's one of the most exciting things that's currently happening.
Yeah, just to add to that, I'd say probably the people that say crypto is a Ponzi scheme probably haven't spent much time unpacking it and understanding what the implications that it can have. I mean, there are coins out there that have been traded in our scams, but I wouldn't. I mean, if you look at the ones that are currently active and the projects out there like Bitcoin, I mean, different cryptocurrencies, you could classify them in different ways. Like some of the ones Nico talked about have utility. They have other wide-reaching impacts that to society. I mean, Bitcoin, as an example, it's often referred to as more like a digital gold, which I think is a reasonable way of looking at Bitcoin. It's like it's a store of value. So, I mean, in saying that, would you say gold is a Ponzi scheme? I mean, I don't think anyone would call gold a Ponzi scheme. So the second part about no stable coins, well, there are different sorts of crypto. A lot of the crypto does follow Bitcoin. I mean, that's just the way that the market has kind of evolved. When we first started, we just had Bitcoin, and then we had Ethereum, and then we had some other cryptocurrencies. And to buy those other cryptocurrencies, they needed to be traded against something. So what do you think they traded with? They traded against Bitcoin. So, I mean, that's still quite a large part of the market. Nearly every single coin is paired back to Bitcoin. So if Bitcoin drops, those coins drop. But we are starting to see some of the coins kind of diverge away from Bitcoin. Like you can see Ethereum, for instance, it hasn't had the same sort of volatility that we've seen with Bitcoin. I mean, even if you just have a look on our website and you filter by the top gainers, top losers, you can definitely see there's other cryptocurrencies that are moving positive even when other coins are going down. And we do have actual stable coins like USDC, Tether, which might be slightly questionable. I think USDC, for instance, that's regulated in the US. Every USDC coin that exists is actually backed up by fiat currency in the bank, audited, compliant, regulated. So, I mean, that doesn't move if Bitcoin moves up or down. That just stays always a one-to-one to the US dollar. And there's a whole bunch of those sorts of cryptos out there that do a similar sort of thing.
Next question we have is how do you apply a fundamental investing to crypto? Considering stocks are a business with cash flow, etc., how is crypto evaluated opposed to speculated? Well, yeah, this is a really good question. It's probably one that most people have when they hear about cryptocurrencies. So, people say buy this coin, buy that coin, and no one really wants to buy something just because they got told about it. So you can't use the same metrics as you would in traditional investing because there's not the same kind of historical price data and revenue and stuff like that. There are a few main things that you can look at to perform like a thorough fundamental analysis of a crypto. The one you'd probably start with is like what the hell is the coin doing in the first place? What is its use? Is it useful? If you hear what its use case is, some of the use cases are more technical, some of them are pretty easy to understand. And if you feel that there's in society, I could see this being a useful thing, which there's a lot of Ethereum, for example, there's so many different uses for that in society. It's hard to argue against that utility. So once you've got a grasp on what the crypto does, you'd probably want to look at the market cap next. The market cap is kind of going to show you the risk reward profile. So if we're talking about a large market cap like Bitcoin and Ethereum, they might see some volatility, but they're going to be a stable asset overall, relatively stable compared to the rest of them. So based on the market cap comparatively to the other cryptos market caps, you can kind of gauge what kind of investment you're getting into. And yeah, there's a bunch of other things, we probably don't have time to get into them today, but they'll be on our Crypto Simple Education Hub, and we'll give you a PDF. But a few other things are kind of the team behind the coin, like the developers behind it. Usually there should be some reputable people in the space. The white paper is always good to look at, which you can find on the website. If there's any spelling mistakes or poorly written content in the white paper, it's probably a red flag that it is not a sound investment. And yeah, plenty of other things. There's like financial metrics you can look at, and the trading volume to see how many people are trading it. You can look at.
So I think we've got it's 8 or 9 steps in a guide that we'll submit to Nathan in a PDF, as well as Nico's just done 2 case studies on 2 coins to just kind of run you through, if he was to do the fundamental analysis, what he would be looking at.
Yeah. So hopefully that's answered. All right.
Yeah, we could probably spend the whole.
Yeah. I don't want to get too deep into that.
So I think if we just send you some information, then we're happy to talk to you guys in more detail, or run another session on it. Next one, what do you guys think about the bull run, and will it happen this year? And if it does happen, is it best to sell when the bull run happens, or would you keep your money in crypto for years? Well, some would argue that the bull run's happened. If you look at the percentage increase from last year, only 7 months ago, Bitcoin was under 10,000 USD, and it's now 44,000 or something. So, I hope it's not over and that we're in a cool-off period and that we'll see a recovery. But at the end of the day, no one knows. What does the market participants feel about it? Long term, I am a bull when it comes to Bitcoin. For a number of reasons. It's got a built-in deflationary mechanism with the halving that happens every 4 years. It depends. You just need to look at what your viewpoint is and what your strategy is. I have my self-managed super set up in crypto. I bought Bitcoin in 2018, I think it was. I can't remember. I bought it for 15,000 each AUD, or 10,000 AUD each. So it's gone up, and then I bought some more earlier, actually just recently when the price has come down. So I've kind of dollar cost average into it. But my intent with that is to keep that for a longer period of time. So I'll probably sell some off next bull run. I did sell some off earlier and then bought some more. So I've kind of grown my cash and my Bitcoin together.
Yeah, I think that generally in the past, people try and predict the bull run based on previous bull runs, which they have followed a fairly cyclical pattern. But yeah, I would say personally, it looks like the word on the ground is a lot of people think it's a different scenario now. We've got institutional investing, we've got these big mainstream banks, companies getting involved, and so there's a good chance that we won't see the depressed asset prices that we did that goes on for years. As for when the bull run actually ends, it's really hard to say. If I personally think there's still some gas left in it, but Yeah, I kind of look at it as a long-term investment anyway. I make sure I do my analysis on the coins so that I know that the coins have long-term potential. I'm not really looking to make a quick profit. And so when Bitcoin drops, I just really see it as a good opportunity to buy more and stack up my bag of Bitcoin. And yeah, hopefully down the track, I think I'm pretty optimistic about it. What do you think of proof of work versus proof of stake? Do you think proof of stake cryptos such as Cardano and VeChain gain value as they are considered more environmentally friendly than Bitcoin and other proof of work cryptos? Yeah, that's a hot question on a lot of people's minds. Something I have researched a lot about. Someone who's cares about the environment more than cryptocurrency. I'm really invested in that, and I would just definitely suggest reading a bit about Bitcoin's actual environmental effect. There's a lot of misinformation about it. There's actually a lot of data to show that it's nowhere near as bad as people make it out to be. And many cryptocurrencies are transitioning to proof of stake or proof of authority, which has pretty much no carbon footprint. And it definitely seems like a lot of cryptos are going that way. Proof of stake is basically just instead of using people mining the cryptocurrency, you are and being rewarded in cryptocurrency for validating transactions, keeping the network secure, which is what mining is, and you get rewarded in Bitcoin. Proof of stake is you get rewarded based on how much cryptocurrency you have staked onto the network. You've put it up there as collateral to say, I'm going to help this network be legitimate, and you get paid proportionate to how much you've staked. So it's a far more efficient system. But as for proof of work cryptos, I personally think they actually have a lot of redeeming qualities. Most of them use renewable energy. I mean, electricity is not cheap, and the cheapest forms of electricity is by far and away the excess renewable electricity that goes on in deserts and goes on in rural regions, which is why so many Bitcoin mining farms are in China. They're in rural places in China. Yeah, which is why we're seeing all the China cracking down, and we're seeing the miners move out of China, which personally I think is a good thing long term. You don't want to have too much mining power concentrated in one place. But yeah, if you're interested, there's some really interesting articles on Bitcoin being a kind of battery to turn excess renewable energy into actual economic value. And yeah, I'm pretty excited about the whole space.
Yeah, I mean, obviously proof of work is what has started with crypto, with Bitcoin, and I mean, it's got trust, it's got the time behind it, which the other cryptocurrencies don't have. So I mean, if you think about just traditional mining, like you're mining resources out of the ground, it requires energy, it requires actual work to produce the coal or whatever, the gold that you're digging out of the ground. So there is an inherent cost which gives it value. And I mean, you can have a similar analogy when you're comparing against Bitcoin and other proof of work coins. And that has built trust into the network, and that combined computing power is one of the things that actually secures the network, because it stops people or stops attackers from being able to forge transactions, because the combined computing power has an incentive to agree. And the proof of stake, I mean, personally, I think that's probably where things will go, but it's still early days, and they don't have the time and the trust that we have with the proof of work coins, just because they haven't been there long enough. So it's still, in my opinion, something that needs to prove itself that it will work. Moving on to the next question: how much risk management would you recommend per trade? Less than 5%. That's a good question. I mean, I would say that different people that teach trading would say different amounts. Like some people, I would say, would do less than 1% per trade. It depends on how much capital you have to work with, and you need to kind of, if you have a few like bad trades in a row, what that's going to do to your overall capital. So it depends if you're actively day trading, or if you're swing trading. There's lots of different sort of trading strategies that you could have that would impact on that risk management. If you're day trading and you're doing technical analysis, then you might want to risk a smaller amount, so that if you do have a few losses in a row, that you're not going to destroy your bankroll. If you're doing swing trading, you're only placing a couple of trades on here or there. You might go, okay, I'm going to wait for Bitcoin to have a 20% drop and then buy, and then you might then place a trade when it goes up 30% from that price. And if it depends, like if you're comfortable with that, like that's one of the approaches I take. I do swing trading. So I mean, long term, I believe Bitcoin will go up. So if I end up buying some Bitcoin and it goes down a bit in price, then I just add that to my like pool of Bitcoin that I'm keeping longer term. And you know, you can ride some of those swings up and down. Like the other day, I think it moved 20% almost in a day. So it went down, went up. But you know, another strategy is trying to time the market. If you're not experienced, you can end up losing a lot of money. So one of the sayings is spending more time in the market than trying to time the market. So it really does depend on what your trading strategy is.
Cool. I think that's all the questions in the chat.
Excellent.
Do you have, yeah.
So we only have maybe a minute and a half left, but I guess if no one else has any questions, that should pretty much be it. And I just want to say, guys, so I've been recording most of the session, and this recording will be available online after this. Plus, Nico and Josh have been referencing a few resources that they're going to send to me, then I'll send out to you guys just for reference. Just learn a bit of stuff. And also, I think we had 2 questions in our sign-up form in regard to capital gains tax for crypto investments. So again, I'm going to send out this information with all the resources I'm going to send out. So that document is going to be for from the Australian Tax Office. Yeah. So we're going to send out all this information to try to back up everything we have talked about today, and just try to provide that extra knowledge that you might need along your crypto investing journey. Okay, so 1 minute to the end, and we're just generally happy with you guys for attending, and special thanks to Nico and Josh. Really happy to get this. We are really happy to get this relationship going. We hope to have future workshops where we'll dive into more details. So for those who are really interested in jumping into fundamental investing, like how do I look at things fundamentally? How do I value stuff? So Nico talked about the steps that you go through. We might drill down on that particular thing during that session. So we're looking at having this in the future, and we hope to see you guys there again. So thanks, Josh. Thanks, Nico, for setting aside the time. It has been a really dense, information-dense session today, and we look forward to having more in the future. Thanks, everyone, for attending. Thanks, Nico and Josh.
Thanks, guys. Thanks, Nathan, for taking the time to put us on, and thanks, everyone that attended. If you have any questions, feel free to message us. We're happy to help.
Okay, excellent. Okay, thanks, Nico. Thanks, Josh, and everyone. Take care. Have a good evening.
Take care, guys. See you later.